Hello everyone, welcome to the Ichimoku.co daily analysis for the S&P 500 for the trading day ending Wednesday, February 5th, 2014. Well, a very small black body candle today and a continuation of the trend to the downside that was established a few candles ago. A very large bearish black body candle broke out down below the bottom of the cloud. We were looking for follow through to confirm the breakout down below the bottom of the cloud, and the next two trading days certainly haven't been great days for the sellers. They haven't continued that downside momentum that we saw with that very large black body candle. The day following that candle was a white body candle where the buyers took control, and again today, even though we have a candle with a lower high and a lower low, we have seen the buyers close with control by closing up towards the high of the range for this candle. Looking at the colour of this body, however, it has turned black, so momentum in net terms has shifted back to the sellers from the buyers, and it's not terribly significant because the size of the body is quite small. What's very important about this candle, however, is the large shadow on the bottom, and the large shadow represents the sellers losing commitment as the market began testing down near the window that was open some time ago. And if you recall, that was an area that we were going to watch, and it seems that the influence of that window is coming into play, with the sellers being rejected very strongly roughly from around that area. Also very strong support down below there at 1729, 1730. Now this does set the market up for a potential change of trend, so we will be looking for the market to make a higher high and a higher low, and considering that we still have that solid base below where the market's trading with this window and the support just below it, it is more likely that we will see a change of trend. The only worrying factor here is that even though the buyers have closed with control for the previous two candles, we haven't seen the trend change technically, and the buyers for today's trading weren't able to move the market above the previous day's high, and that does cause some reason for concern. If we look back here in the recent past, this level just above where the market is trading at the moment, around 1760, has provided some previous resistance and then support in a minor way, so it is an area that we should be watching as a potential barrier to this market. Now, if the market does rally above there, we should see some strong resistance coming in around 1775. That's a previous strong resistance and then support level, and also coincides with the bottom of the cloud. In terms of the Fibonacci extension, here we've seen the market testing down below the important 61.8% level, being rejected from there. Once again for today's trading, testing down below and being rejected, and almost testing to the 78.6% level. With the lack of support from the sellers in both of these candles, it does suggest a real possibility of a change of trend, but we want confirmation of that. What we're looking for is a candle that's going to make a higher high and a higher low. Now, in terms of Ichimoku, obviously a bearish market in all three time frames, and it really does say something about this market that if we look at all of this trading for quite a long period of time, going back to early September, we had a bullish market in the long-term time frame, and for much of the medium-term time frame and even the short-term time frame, and a very, very strong and significant change in sentiment occurred a couple of weeks ago towards the end of January. The market broke out down below both of the Tenkan Sen and the Kijun Sen indicators, rallying up towards them, and then they were holding as resistance. Now here there is a possibility of the market moving in line with being bearish in the three Ichimoku trends, being below the cloud, below the Kijun Sen, the pink line, and the Tenkan Sen, the green line, and that's confirmed by the Chikou span being below the corresponding price action. So the price action here that we're seeing now seems very similar to what we saw about a week or so ago, where we saw this very strong sell-off. We saw a feeble attempt at a rally here, but mainly congestion, and then now we're seeing similar type of price activity, and we're starting to see congestion around this area. So the market's moving in a step-like manner, and if the market can break out down below the window and the 1729 level, we could quickly see this market testing down to around the 1709 or even the 1700 round number level. Now, we can't preempt the market, however, so with the sellers not favouring this market at the moment in the short-term dynamics in these previous two candles, there is that chance of the market trending up. So what we have to do is react to the market as it tests either of these support or resistance levels, and what we're looking for is either a bullish breakout to the upside or a bearish breakout to the downside.